This is Andrew here with Spark Finance, and who said business was never exciting? Have you been seeing what is going on with GameStop right now? I mean, even if you've seen it, you've heard it in the mainstream news, maybe you don't really fully comprehend what is going on here, and that's what I want to go through in the video. Like, let's go through a timeline of all the events that just happened, and we're going to do it quickly, so hopefully you can keep up. But to start off with, you have an announcement on Reddit, on the forums for Reddit called Wall Street Bets, where an individual said in April, this is way back in April 2020, he was looking at the due diligence on a company called GameStop. So GameStop is the video game retail outlet that sell new and used video games. And he said the short interest in the stock is up to like 84% right now. Keep in mind, most stocks don't get to over 60 or 70%. Like, that's already high for a short interest. It was at 84% in April of 2020. So this guy made a post on the forum saying we should go into this stock and basically force these people with short positions to have to cover and make the stock price go up, and we'll screw them over and make ourselves rich. So one thing to remember here, when I'm talking about this, to save words here, if you're on the long side of a stock, you make money when the stock goes up in price, the share price. If you're short a stock, if you're on the short side, that means if the stock price goes down, you make money. So those are the two sides here we're going to be talking about, right? So this guy had this post, and GameStop was trading at like $4 a share back in April 2020, okay? The whole company was worth maybe like $300 million. And this was going on for a while, and then it started really picking up in the September to December period, where the stock price started going up a lot now because people were catching on to what this guy was saying and what other people were posting on this Wall Street Bets forum. So now you have all these people going into the buying shares or buying options on the shares, driving the price up. And what happened was you had a bit of a short squeeze where a lot of the hedge funds and institutional investors, they were on the short side of this position because they thought GameStop was going to go bankrupt, right? This was supposed to be the next blockbuster. The whole business model is being destroyed right now. Games are going digital. Nobody needs to buy the physical copies anymore unless they pivot like a company like Netflix or something like that and they change their distribution model. How can they survive, right? So they were taking the position that let's bet that these shares are going to go down. Let's borrow the shares from somebody else and sell them on the open market with the intention of buying them back later at a lower price to close out the position. That's how the short sale works. So a lot of them were doing that. And then when all of the people from Reddit and the individual or retail investors came in, they drove up the price of the stock, and it was, it went from $4 to $17 to $20. Then on top of this, at the end of last year, you also had a really famous guy from Chewy Inc., the online pet retailer, sells all the pet food and pet supplies and everything, called Ryan Cohen. He came in and he was purchasing tons of shares of GameStop because he kind of wanted to try and reinvent the company, right? He got on the board of directors. Another member of the Chewy executive team also was on the board of directors for GameStop. So that happened at the end of 2020, and he bought, I think, 76 million shares on the open market. So that was a big position. He owns about 13 to 15% of the company at that time. So this helped stop the GameStop stock price go up as well. So it went up to $20 to $40, right? So then you had these big hedge funds, and in particular, there was two main ones here. You had Melvin Capital and you had Citron Capital. And one of the guys from Citron Capital came on to do interviews, and he said, oh, we're shorting this stock. It's at $40 now. It should be at $20. It's going to go below 20. And this kind of blew up in January here. And this is why it's all over the news right now, right? Because when this happened, everybody kind of jumped in on this trade, on the Wall Street bet idea that, hey, it doesn't matter what the fundamentals of the company are. If we can drive up the price of this stock, we can make those hedge fund people go bankrupt, and we can take all their money and put it into our pockets. So that was the plan, is that they were going to force these guys to have to close out their positions at a loss. So it spread like wildfire, and everybody started buying the stock. I mean, ask people you know if they got involved with this. Everybody wanted in on this. It became more of a populist uprising of the poor against the rich and the people that got bailed out on Wall Street versus the everyday man. And that's how this thing got so much momentum. So then you saw a number of big things happen in the past week here. You had like a lot of big names come into this. And speaking of big names, it was Chamath Palihapitiya. He came in, and he's a billionaire that also has a hedge fund, but he came in on Reddit and was asking, actually on Twitter, asking people, what stock should I buy? I'll put a couple hundred Ks into it. And of course, GameStop came up because that's the talk of the town right now in all these forums. So he said, okay, I'm going to go and I'm going to invest in GameStop. So this is one billionaire that mentioned it, right? Then you had the Winklevoss twins. I think it was Cameron Winklevoss, or I'm not sure which one, but one of them came out and they're both worth, they have net worth of $1 billion. And he came out and said, oh, look at this stuff that's going on in GameStop. It was kind of like pushing it as well. Then you had Elon Musk. After hours, he said, oh, he made a kind of a joke about GameStonk, because that's what it's called on the meme. And these are known as meme stocks. So that came out on Twitter as well. So that's billions, $190 billion worth of high net worth individuals that were also kind of promoting this stock. So by now, last time Elon Musk tweeted about something, he tweeted about Signal. People went and bought Signal Advanced stock, which was not even the company he was talking about it, and drove it to all-time highs. So what do you think happened with GameStop after, these big guys decided to go into it? And this is already in the period where it went from like $40 to $60. The big hedge funds that were in this now are losing millions and billions of dollars at this point. And what they have to do is, the problem when you have a short position in a stock is that you have to buy it back at some point. And you do that on a margin a lot of times. So if the price of the stock goes up, you get a margin call and they say, hey, you have to put up more in collateral or we're going to close out your positions. So what happens is the higher the stock price goes, and it can go up infinitely, right? A stock, if you buy a stock and you're on the long side, it can only go to zero. You can only lose what you put into it. But if you're making money if the stock goes down, and you're losing money if the stock goes up, it can go up from $5 to $1,000 to $5,000. There's no end in sight on that. So it has a lot of downside risk on these short plays. And that's why a lot of retail investors don't do that. It's more of hedge fund and big businesses that do that. So the same guy from Citron Capital that was saying this stock should be less than $20 because the company's got poor financials, they've lost money for the past, I believe it was 6 quarters. Since 2019, they've been losing money, and every time they're losing more money every quarter. So it doesn't look good from the financials at all, but it doesn't matter because so many people were just buying this as kind of a stab at Wall Street. So people would hopefully be putting money they can just risk, and they don't really care if they lose. They can take their stimulus checks and just take that money and throw it into GameStop stock. And you saw the stock go up to $146 in the midweek. And then you had those big announcements from the billionaires, right? So after that, man, the stock shot up to $350. It shot up to $400 at one point. Originally, it was at $4 in April of 2020, and it went up to $400 here. So then you had Chamath came out and he said that what he did was he bought $100,000 worth of call options. And I thought this was interesting, right? Because if he was talking about buying the stock, why not just directly buy GameStop shares instead of stock options? So he ended up buying these options for it to, this created another unique situation, right? The short sellers already got beat up on this, right? A lot of them closed out their positions. The guy from Citron Capital said he closed his positions at 90% losses. And Melvin Capital, they had to close out their positions because they had such a big loss. It was like $3.2 billion in losses that they had to get a capital injection from other companies. Like it was Captial and Point72, I believe, gave them $2.7 billion just to shore up their finances here after they took these massive losses, like 30% for the year on the whole company right now. So a lot of people, their goal was to basically bankrupt these companies. And then you have the billionaire comes in also and does this kind of call options. And I'm looking back at the original postings on Wall Street Bets. A lot of the guys are not just buying the shares of stock, they're buying call options. So the call option is alongside of the trade, but you make money if the stock is past a certain strike price. So let's say the stock is above $60, you make money on all of the appreciation above $60, and if it's below 60, it's worth nothing, okay? That's a simple way to explain it. And I was like, why are they buying this? Well, what ended up happening was this created something called a gamma squeeze. So we had the short squeeze where people had to cover their shorts as the price went up on the market. They had to cover it before they couldn't sustain the losses anymore. It would bankrupt them. Then you had a gamma squeeze where the institutional investors, they're the ones selling all of these kind of, all these options that are derivatives on the market. So when they sold all of them, all of these ones on GameStop, that's a huge amount of money that they're going to have to pay out if those call options are favorable to the retail investor. And because the stock shot up so much in price, it looked like that was going to be the case. So as a hedge fund normally does, they try and hedge their risk. So what they do is they buy shares on the open market to counteract the short side they have by selling call options. With options, there's a call and a put. A call is on the long side, a put is on the short side. When these companies are selling naked naked call options, that means that they don't have anything backing that, right? Like if they have to pay out millions of dollars there, they have to somehow come up with that money to pay those people that own the options. And a lot of these options were like way crazy high values, but because the stock went up so much, they're actually going to be met. So now all these institutional companies, all these hedge funds had to go on the open market and buy shares of the stock, which would hedge their exposure from the call option. So even though the stock would go way up, they'd be making some money on the actual shares they owned versus the options where they were losing money. And there's a really technical way to look at it and how they counteract each other, but you just have to understand the overall picture here. So that was two kinds of, they had a short squeeze and a gamma squeeze. And what they do there, it's called delta hedging when they do that, when they buy the shares on the open market to counteract the call option that they sold. So this is why you had the stock shooting up to $300, $400, right? That an insane amount when this company, so to keep in mind here, this is something that nobody would want to own this. This is like a greater fool theory. You don't want to be the one left holding the bag. So let's say this shirt, for example, right? You might pay, I don't know, $10, $20. Let's say you pay $20 for this shirt. Okay, it makes sense. Maybe you want to pay $40 for this shirt, and it's still acceptable. But how about paying $150 for this shirt? How about paying $400 for this shirt? You can see it starts getting a little crazy, and it's like, does anybody actually want this shirt for $400? Because if they do, I'll sell it to you, just let me know. But the problem is everybody's buying shares in this stock that, yes, they saw the short position, which was originally at 84%. It actually went up to 138% short. So more than the shares outstanding, the float on the actual marketplace were sold short. That means that, and I talked about this in my other videos, that let's say I was a person that owned shares, I'd loan it out to somebody over here and they would go and sell it short, and then I would loan the same shares out to this guy over here and sell it short. So there was more shares sold short that were on the market. So this was a perfect, there was a couple reasons why this situation was perfect for the short squeeze and the gamma short squeeze. So what happened was you had a low market cap company. This company, the whole value of the company was under $5 billion when this all started occurring. Then you had the whole situation with it being short way more than any stock normally gets short. And that's why these institutional investors, they kind of got caught with their pants down here, because they had a tale of two GameStops where you had the one that was doing really well in the share price, but the actual company, which is the other tail, the actual company's fundamentals are deteriorating and they might go bankrupt, and then you have the company that's the share price going way up. So you have this kind of different, unique situation here that people had to go through. So then on top of that, you also had this social media, this influencer process of spreading out to everybody. And this got into mainstream news. It was kind of everything you talk about. Even politicians came out and started talking about this. And that's when you know things got to the top level, when they can realize they can get some more power by talking about it. So what happened, where we are now, is the stock went up so much and there was so much trading on this that the amount of volume on the exchanges right now is at all-time highs from going back to like World War II, I think. Or no, at least it was 2009 was the last time this many shares traded. I think it was like 23, 24 billion shares traded in volume. And if you look at GameStop stock in particular, the amount of shares trading hands was more than Apple stock, which is the largest. It's a $2.2 trillion company right now. GameStop shares of this small retailer traded more volume than Apple stock in this past week, just on a daily basis. And it was not just a little bit more. It was like over twice as many shares traded hands. So this created a big problem now for the market makers. And a lot of the people that were buying this as a retail investor were doing it on Robinhood, Webull, Charles Schwab, TD Ameritrade, Etrade, Interactive Brokers. All those brokers then came out, I believe it was on the 27th, between 27th and 28th, and they came out and said that they're going to halt or suspend trading in particular shares of stock. And because GameStop had gone up so much, the retail investors were also going into other companies that were heavily shorted. So you had companies like Nokia and Express, the retail chain. You had Blackberry, you had Bed Bath & Beyond, AMC. All these shares also started going up because they figured they could do the same thing that happened to GameStop, which had that unique situation. And they thought they could do that with all of these other ones as well, which they did to some degree. They're way up, but it's not on the same level as GameStop. So now people are furious. This was a populist uprising saying like a screw you to Wall Street here. And that's fine. I mean, people are going to make money and lose money on this. That's fine. It's acceptable. The problem is that Robinhood and Webull then announced they were halting trading, and they literally said the small guys can't buy the stock anymore. So how do you stop a momentum stock from increasing anymore in price? You literally tell people they're not allowed to buy it anymore, only to sell. So that happened, and yet the stock still remained between $200 and $300 a share, which is a testament to all of these people telling everybody to hold the shares and not sell and continue to go against the hedge funds here. So there are now lawsuits that are trying to be brought against these different companies. Robinhood has lawsuits. And also, if you signed up for Robinhood, there's an arbitration clause. So you can't just directly sue them in courts. You have to go through their arbiter instead. So I thought that was another interesting thing that's come up now that we see this kind of very unique situation with the stock. Then all the politicians came in, right? They said, this isn't fair, this isn't allowed, we have to do something, you know, we have to go in there and we're gonna do investigations and everything. This is all in the mainstream news. That's where we are now. And the question is, where does it go from here, right? Do you still want to own this $400 t-shirt? No, I mean, eventually people are going to want to sell. And the problem is that most of these short positions, there was a lot of options expiring on Friday the 30th or the 29th. And the next one next week, there's a lot of options expiring. I think that's on February 5th or so, or 6th, on February 6th, I think. So after that, all these people are going to be closed out of. You think these hedge funds are going to stay in these positions where they're losing billions of dollars? Like, we even had Citron Capital came on and said that they closed out these positions. Andrew Leff from Citron Capital even said that he got death threats because he was going to post another video saying why they were going to continue to short the stock before when this all started blowing up. And, you know, he ended up not doing that because of I guess people were attacking him, trying to hack his Twitter and everything else. So that's on the bad side of this. On the good side, you have like the people making a lot of money. There was a fifth grader or like a third grader or something that made $3,000 because of shares that someone in his family gave him. That guy, Ryan Cohen, actually ended up making his position going from $76 million to $1.7 billion. So he is now a billionaire on paper, of course, because we don't know if he took the profits or not. And Michael Burry, if you know him from The Big Short, he's the one that shorted all the subprime issues in the 2008-2009 financial crisis, right? So when he did that, he made, you know, hundreds of $millions. I think it was $700 million for his fund that he was running. Well, he just made a return of like 1,600% because he owned millions of shares of GameStop before this all started occurring. And he put out a tweet saying, originally he's like, you know, it's great that people are making money and it's retail investors are making money, but this is very dangerous and this shouldn't be allowed. This is not a good thing. It's not a positive thing that's occurring right now just because of how speculative this all got. So now we have to see where is the tail end of this, right? There's going to be investigations. People want lawsuits against the brokerages. The brokerages claim the reason why they had to suspend trading. And you know how if there's trading on an exchange and a stock price goes up or down too much in a certain amount of time, it hits a circuit breaker, a market circuit breaker, and they'll halt trading in that stock for a period of time. We knew that already, but why did these brokerages stop trading? Well, they have to pay a clearinghouse. When somebody makes a trade on their platform, for 2 days, they have to pay for the cost of that trade basically with the clearinghouse. And the clearinghouse said that there were so many people doing these trades on such volatile stocks that they raised their requirements for how much margin you have to put up to cover those trades. And now companies like Robinhood actually had to go out and they raised $1 billion from Sequoia Capital and some other big institutions that they can have enough money to cover the clearinghouse costs. So some of them, they've reenacted a lot of the trades on these companies or limited amounts of these trades. But still, it's still crazy that the stock through the end of Friday was up 400% in 1 week. It was up 400% here and it held that kind of over $300 price range. Now, what's going to happen next week and more importantly after next week, right? Because if this is a big thing, is a populist uprising here and people want to kind of strike one at Wall Street, it's okay if they don't care that they're going to lose money on this, but nobody wants to hold GameStop forever. So how long is it going to take before GameStop actually sells off? And if you look at the amount of options trading hands on this particular company, I like to focus on GameStop here because this is the important one and the one that started the whole thing. There is a ton of options going on. And I wonder if the hedge funds now are going to be betting on put options on the short side of the stock that it's going to go down in the next few months, because obviously this price hike is not sustainable, right? Now that the short squeeze is over, who else needs to buy the shares? There's nobody being forced to buy the shares after another week or two here. So where is all the buying going to come from to keep the stock price elevated to where it is? Think about that. Even if these people want to just hold their shares, every so often somebody's going to say, oh, I might as well sell here. Might as well take the profit. And I hope people took profits if they made some in this stock. But now, where is it going to go going forward? That's the most interesting concept here. And I feel like a lot of people feel now that this situation caused a lot of people feeling a loss of trust in the marketplace, and just people thinking that the game is rigged. And this is not what you wanted to see. They couldn't have just let it play out where we could have seen the people lose money, make money, and it would have just been a great story. But instead, we have this kind of business where people weren't allowed to trade and everything. So a lot of investigations are going to be done around that. And maybe we're going to see some changes in business practices because of that. So overall, that's kind of the timeline of everything that occurred with this one. I think I got everything in there, but I'm going to keep following the story here, but I figured it deserved its own video. Thanks for watching Spark Finance.